Hi everybody, we're gonna talk today about the types of stop losses that we have in MoonTrader at the moment and take a look at how they work. So the types of stop losses that we have at the moment are a limit, market, or stop limit stop loss. As for the take profit, we have only two options, the limit and the market take profit. Okay, so first type is the limit stop loss, and it has an additional parameter. It's called the spread, and I've set it at a very low level of 0.01%. So the limit stop loss is a virtual stop loss. Let's take a look and see how it works. Make sure that it's trailing here. Okay, I'll place a buy order over here. I'll wait for the price to cross it and for the position to be open. Let me pull it up a little bit. I'll just throw it into the opposite side of the order book to execute it instantaneously. So you can see that the take profit, the blue line, and the stop loss, the red line, from the point that the position was open, the stop loss was placed instantaneously. The line is vertical, whereas the take profit, it took a little while, so there was a small delay due to the latency. And the reason is that the stop loss, the take profit is on the exchange, so it's a real take profit. You can close the terminal, you can close the you can shut down your core, and it'll still be placed on the exchange. Right now my stop loss is virtual, and if I move it, you can see that the movement is instantaneous. It's vertical, there is no delay. Do the same for the take profit, and you can see the delay from the moment I moved it to the moment it got placed at the new level. You might ask yourself, why didn't my stop loss work here? Well, that's because it'll take into account only the average price, which you can see here as the black line. It needs the average price to cross the stop loss line for it to be executed. Now I've placed the my stop loss has a very small spread, and I want to demonstrate how this spread will work. So once the price crosses my stop loss line, the red line, you'll see that it will be replacing the order down as the price goes lower in small increments until the moment that the stop loss will be executed. For the stop loss to be executed, I will need to have a green dot, a buy order, right? Now let me pull it a little bit closer. Hopefully it'll cross it and we will be able to see it. Let me do that one more time. Okay, so the price is getting closer and closer to my stop loss. Well, technically I'm pulling the stop loss closer and closer to the price, waiting for it to execute. Okay, so you see that it did cross the line once, and then it replaced the order, and as soon as the next green dot appeared, it closed my position. Okay, I just placed now two long orders. I'll delete one, I'll leave just one. I want to show that one more time for you guys to see, to be able to better see. So again, a virtual stop loss, pull the stop loss closer, expect the price to cross it. It's running away from my stop loss again. That's all right. Oh, beautiful. Okay, so it executed. Nice. So what it does is it removes the real order that's placed on the exchange. It cancels it altogether, and starts moving the stop loss down in small increments depending on how high or how low you set the spread to close your position. So once again, to recap everything, a limit stop loss is a virtual stop loss. Moving on to the next one, a market stop loss. You can see that once I've chosen the market stop loss, the spread field was disabled. There is no spread in the market stop loss. Market stop loss works technically just as it sounds. It will throw your entire position the entire volume that you have into the opposite side of the order book and close your order as soon as possible. So this is the option that we would recommend for beginner traders, right? So as long as you have your terminal open in front of you, you want to make sure. So technically speaking, everybody understands that a stop loss is there to minimize your losses, right? To stop the loss. So you're thinking, why should I be using a limit stop loss? I want my losses to be stopped as soon as the price crosses it. So yes, this is what the market stop loss will do. But as long as you're trading with small positions, small order sizes, that's okay. Once you get to huge order sizes, you will start to understand the reason why people tend to use limit stop losses. Nobody wants their position to be so nobody wants their stop loss to throw your entire position into the opposite side of the order book, because that will technically mean that you got a bad deal. You got you got one price, and you got a bad deal. You maximized your losses. And if you do it as a limit stop loss, the price will slowly, so your order will, your stop loss will execute slowly in small tiny increments, and that way you will, technically speaking, minimize your losses by reducing so the average price of closing your deal. Hopefully in later videos, when we will do maybe a masterclass, Lex might do a masterclass in trading, you'll be able to see that better. So you see that I've chosen a very volatile market, and they doesn't allow me to close it using a market stop loss. I do that once again. I'll just throw it into the opposite side like so. Come on, go down a little bit. Okay, seems like it'll happen. Yeah, so as soon as it happened, as soon as the average price crossed it, it closed my position. No following, no nothing, just closes the position instantaneously, throws your entire position into the opposite side of the order book, and closes the position at the market price. If you are trading on a very volatile coin pair, where prices tend to jump over 1% in an instant, what we would recommend is that you would use a spread when trading with limit. Use a spread of at least 1%. That's for volatile markets, because you might end up in a position where you place your stop loss, the price crossed it, but it crossed it way further than 1% down. It crossed 3% down, and then the order will not execute, your stop loss will not work, and then the price will go lower and lower and lower and lower, and eventually you might even end up being liquidated without the stop loss even being triggered. So yeah, that's how it works. The last option that we have is a stop limit stop loss. Now the difference between the stop limit and the limit stop loss is that the stop limit stop loss will be placed on the exchange. Let me just show you how that works real fast. I'll change the take profit to a market type. Now the stop limit stop loss will be placed on the exchange, which means that you can see, by the way, from the way that the position was opened, that this time around your stop loss was placed on with a small delay. So there's a latency, which you can see here. While your take profit, you can move it at any time, and you'll see that there's no delay happening. Do the same thing with the stop loss, and you can see the delay that's due down to the latency that you have with the exchange. Now the stop limit stop loss technically works like the limit stop loss. The only difference is that it is going to be placed on the exchange, which means that you can close your terminal, shut down the core, and you can sleep knowing that your stop loss is on the market. So no matter what happens to the exchange or the VPS that you're Core is running on, or maybe you're running it on a local machine, your internet cuts out. That's it. Your stop loss is placed on the exchange. It's there, they know it. And again, we recommend that you use higher spread when trading on highly volatile markets. And for Bitcoin and the biggest altcoins out there, we would recommend at least 0.5, so a 0.5% stop loss. That's all there is to the stop losses. At the moment we have 3 of them. We might come up with other variations of these as time goes by. Of course, we're doing all of the changes and everything based on your suggestions. So most of you asked for us to show what has changed in the latest version of the terminal that you got. That's 1381. You can see it over here. You can see it in your copies of the MoonTrader as well. A short mention that I would also like to make is that we're still seeing numbers grow in our tournament team, and we're hoping that you guys, whoever has not yet made up their mind, we're hoping that you will join our team as soon as possible, as time is the countdown clock is running. So there's about 9 days, if I'm not 9 to 10 days left until the tournament starts. Another thing is that another complaint that we have seen a lot in our group chats is the issue with the Windows Defender, and I would like to take this opportunity to tell you all that there is nothing to fear. There is no virus or anything. There's no malware that we're trying to push into your machines. The reason why Windows Defender is not accepting and is not being friendly with our software is that we have not yet signed it. As soon as we do that, there will be no problem. When Windows Defender, you will not be seeing the notification anymore. But once again, I want to reassure everybody, we are not trying to push any type of malware onto your computer. This is a standard procedure. As soon as Windows Defender sees a program that is written to run automatic updates, it will notify its user of a potential malware situation, which is not the case with us. And that would be it for today. I hope that everybody is using the auto updating feature that we have implemented into the launcher. So now every time we have the latest version, you will be able to see that in your launcher. Just click on the green tab up top and it'll auto update. That's about